Welcome back to the second part of the Cupid trade series. Now, in this particular video, I'm going to break down the second trade that I took in Cupid, in which overall I have made over the span of the two trades 10.5 lakh rupees. I'm going to break down exactly what I did right, what I did wrong, what I should have done better, because in this particular trade, there were a lot of things that I could have improved upon, which I've only realized in hindsight. So we're going to break all of this down right from the scratch. So let's get going. All right. Now, the first thing that I want you guys to notice is that Cupid, after I traded it all the way from 94 to around 125, 130 rupees, after that has gone on and made a consolidation to the right hand side. Now, this is exactly what I like to see in stocks, right? So if I take you to the whiteboard and I explain to you what we tend to see in stocks happening is after you make a powerful base like this, right? And then you break out. The best possible action is that you make a secondary flag, then break out again, and then make your last flag. This is what an ideal swing trading stock looks like, which is rated a 10 out of 10. For the sole reason that you get one entry point here, one entry point here, and another entry point here. This is what I want to see. Now, what did Cupid do? Right? Cupid gave me this big base, and then I captured this entire up move in Cupid. After that, I saw another flag, and then I captured this entire up move in Cupid. This is exactly what you want to try and do as a swing trader. What are the key points here? Ride momentum, right? Ride 10-day. The second key point, look out for flags, right? That's very important that you have to keep looking out for flags, and all criteria should be met. All entry points are needed. Okay, now let's break down the particular stock Cupid. What did I do right and what did I do wrong? So firstly, starting with my first entry point, I entered the stock on the 4th of June, right? And if I have a look at what the index was doing on that day, all right, so the index was above the 10-day moving average. All right, so positive signs. Cool. And the index was also going sideways at the same time. Cupid was also going sideways. So if we have a look, you can see index is going sideways, Cupid is going sideways at the similar time, basically replicating the way the index is moving. All right. Now let's see what happens post that. So I take an entry off of here, right? So if I just hide my drawings for a second and I take you guys back a couple of bars right here. Okay. So this is exactly what I was seeing in Cupid. Chalo. I'm going to screen grab this and put this over here for us to paste. Okay, so simply put, now over here, what am I looking for as an entry and exit? My entry would be off of this mother high, and my exit would be at this previous day low. Now, overall, what did this come to in terms of a percentage? Let's see that as well. All right, 2.66%. So, number one, right? Small gap is above the 10-day. Lovely. Number two, stop loss is 2.5% ish, right? So very nice tight stop loss. All right. Now, number three, let's see what happened. What's our next entry point criteria? Is the stock in stage two? Definitely. So stock is in stage two and has linear moving ability. Chalo. Number four, what is the next thing that I'm looking out for? Is there a prior up move? All right. So Cupid had a big move here, then came sideways, had another big move here, and then has come sideways again. So yes, there is a prior up move as well. So I can tick that as well. Prior up move. Lovely. All right. Now, if I get to number five, what is the next thing that I'm looking for? Clean price action. Yes, there is clean price action. Cupid is a fantastic stock which tends to ride the moving averages time and time again. So, clean price action is there as well. Is there sectoral strength? Yes, there was sectoral strength. I've spoken about this. FMCG space was doing good, even though Cupid is not necessarily just in the FMCG space. Overall, it's quite a unique company, but because of its prior trend here and then a very nice rounding bottom formation here, the FMCG space like Bajaj Consumer stocks like that also doing decent, we can say that it was in a decent sectoral strength, right? Sixth is the pivot at the 10-day. Yes, the pivot is at the 10-day. So that is another tick. And lastly, the liquidity of the stock, fantastic. Liquid name. Lovely. So all of my 7 entry points are ticked, which makes this a 7 out of 7 A plus entry point. Easy, right? This right here is the gold standard for anyone wanting to swing trade. I have shared exactly what my entry point criteria is. gold standard, guys. Trust me on this. This is the gold standard to swing trading in the Indian stock market. You make sure that all of your stocks have 7 out of 7 entry points, you will be massively profitable for sure. Okay, now that we've discussed all of these points, let's talk about the next few factors, which is how did the trade perform? So we'll go on to now trade management. So let me just make that the heading for this, trade management. All right. Now, what are the things that are important in trade management, right? Of course, firstly, you want entry, then is during the trade, and then last is exit. And then you will reflect. Okay, so let's talk about the entry first. So if I just switch the color right here, right? Entry. I entered right here on this day. I did not get any slippage. I remember that. So solid entry, no slippage, which is very lucky, right? Lovely. Chalo, no slippage. Now, during the trade, what happened? Let's discuss that. Now, here's where I'm going to bring back my drawings. Okay, so I entered a 20% size, as you guys can see, right? Then stock goes up, goes up, goes up in my favor. On this day, I booked 1/3 from on the basis of an extension from the 10-day. Now, let's see what was happening in the index at the same time, which will help you understand my psyche, right? So, stock is going up, index is still sideways and very choppy, and most breakouts are not working here. This was a very choppy market, just like it is currently. All right, so if I set some context right here, context, choppy market, 2 out of 10 stocks working. Okay. So what did I do? We will break down each of my exits. I think that's a good way, right? What I should have done better. Exits. First exit, extension from 10. Okay. Now, was this a good exit to take or not? Is my question. Let's see. We were up 15% from the buy point. Okay. 15% is a very normal move in a swing, right? A swing stock, you expect a stock to move 15% in your favor. Now, what was going on in my mind over here, what I feel is that I was worried and I had, uh, I wouldn't say I was fearful, is what I would say. I was fearful that I would let go of the gains that I had made in 15% in a bad market environment. However, what should the mindset have been? More so, it should have been that I have made 15%, which means I have caught a winner. And if I have caught a winner, my duty as a swing trader is to extend that stock for as long as possible, right? Without giving it too much irritation. Is this abnormal price action till here? Absolutely not, right? So maybe that 1/3 did not need to have been booked, and I should have been mentally prepared that if it comes down to the 10-day, I'm willing to give up these many gains. Is what I feel in hindsight I could have done better, right? So, of course, I'm going to get better and better as I grow as a trader. But this is one thing that I feel like I could have done better, where I feel like maybe I was looking at the PNL, and that's the error that I made in terms of booking too early, my first 1/3. Now, let's see what I should have done otherwise, right? Okay, here, this is a day that you book your first 1/3, right? What happens is an outside day, I always take a partial off. So my second exit came when? Outside day, and it was on the next day, right? So this was a 1/3 sell, and this was a 1/3 sell. Now, what has happened is, right, in this particular sell point, which I did not need to do, I lost 33% of my holding. Over here, I lost not, I would say, matlab I gave up another 33% of my holding, where in fact I could have, instead of giving up 66%, I could have given up only 33% and held for a longer period of time. So that is where I feel that this extension from the 10-day, I should not have sold, and I would have continued to sell on the outside day that I see here. So in my opinion, right, this is a perfect exit, no issues at all, perfect partial profit booking. Sorry, partial profit booking. This one maybe not needed. I genuinely feel like I could have done better here. Should not have gotten into that state of fear, because the moment you get into the state of fear, you've kind of lost it as a swing trader, right? You don't want to do that. All right. Now, what happens after that? Let's see. Cool. Stock is up again. And also look at the recovery here. Superb recovery. All right. Again, stock is up. And this is where I personally feel like the stock is definitely starting to go parabolic in its nature. I've now, in the ideal case scenario, I've only sold one third, not two third, in the ideal case scenario. All right. So let's just, for now, let's go through what I did and then we will see what I should have done. All right. Then, okay, over here, massive shakeout, right? A big shakeout. So I feel like this is fine booking 1/6 on this day. It's fine, not an issue. And then next day, another shakeout. I booked everything and I got out fully. Okay, so my third exit was 1/6 at shakeout. And then my fourth exit was 1/6 at shakeout. All right. Now, let's see what the stock continued to do after that. All right. So I captured a move of probably, I think, around 161, 162, 22%. Stock went up 71%. 50% more than what I sold at. So what are the key learnings here? Right now, this was the exits that I took, and these are the exits that I should have taken. So I'm gonna make this black. Chalo. Okay. Should have taken exits. All right, let's break this down. One, right? The first thing that I should have done is I should not have sold here. I should have sold on this particular outside day. So my first 1/3 would have been, yeah, at the outside day. Okay, first 1/3 outside day on what was the date? 11th of June. Okay, that's what I would do. Now the second 1/3 is not the second 1/3, the second exit. Let's see. Okay, you go up, and here is where I 100% feel the stock started going parabolic. So on this shakeout, I would have booked another third or a sixth. Let's be realistic and say I booked another third. Okay. Now, I have already lost 66%, not lost again, sorry. I have already booked 66% of profits. When I only have 1/3 size left, what should my goal have been? Simple, right? And this is what I'm going to do from next time. Ride with the 10-day moving average. What happens is, I think I started micromanaging, which I could have avoided, right? And if I simply just rode it with the 10-day moving average, or I just rided the 10-day moving average, that would have been ideal. Because what happens is, and I saw this or I heard this somewhere, that no stock will make a big move without making a scary candle. Right? If a stock is making a big move, it will have at least one scary candle in it. So you need to be able to just ride the 10-day moving average. Once you've booked 66%, you've taken your money home. And that is the learning that I have gotten from my second trade in Cupid, right? So simply, let's say I sell my first 1/3 at this point at 11%. I sell my second 1/3 at this point at around 22%. So I've taken home around 15% gains. Now, with my last point, if I'm just riding the 10-day moving average, right, and I'm exiting here, exit my last point at 50% gains. So on a 20% size, that's what, a 7% position at 50% gains, right? How much does this become? Let me just calculate it real quick, because right now I don't think I would be able to do that mentally. So that would simply be what? Um, yeah, so 7% into 50%. This right here is a 3.5% impact on your portfolio. 3.5% from the last trim is massive. And then you add the 66% of the stock that I sold at around 15% gains, which is what, a 14% move at 15%, which is another 2.1% impact. Right? So how much does this become in total? This becomes around a 5.6% impact, if I'm not wrong. Yeah, 3 to 5. Yeah. So a 5.6% total impact trade, which should have been done, was reduced to what? A 22% into 20, around a 4% impact. Less than this also. So I lost 1.6% impact because I was unable to ride the 10-day moving average. So, what are the key mistakes and the key learnings? Firstly, good entry, fantastic setup, very good identification. But in trade management, okay, and I want you guys to learn this from me, that in trade management, once you take money home, once you take money home, which means your first one third, your job is to trail. Okay. And what do you trail? The 10 and 20-day moving average. Another ideal case, let's say I booked my one third on this day, on the outside day. After that, I just ride the 10-day. I don't care if the stock wants to shake out, break out, look out, whatever it wants to do, let it do. I'm just gonna trail the 10-day moving average. And if I did that, right, and did not pay attention to these 7% moves, which again, that is a very good thing to do, which again I feel like another thing that you can improve on. Then you're selling one third here at around what? At 11% you're selling one third, and you're selling another one third somewhere here at two third at 20 at 50%. So that becomes what? Right? The most ideal case scenario for a swing trader, one third at 11%, two third at 50%. So that is what, one third at 11%. Again, I'm going to calculate this because I want you guys to know the exact impact that gets generated, right? So one third at 11% is a 0.7% impact, because this would be 7% of the 20% size, and this would be around 14% of the 20% size. So a 0.77% impact from this one. And then from this one, you would generate around a 14% into 50%. You would generate a 7% impact. So this becomes a 7.7% impact rate. All right. So what have I done here? I have shown you guys, firstly, what I did. Okay. What I did generated 4.4% impact on portfolio. Second case, I've shown you what is feasible for a swing trader with respect to the fact that you sometimes will get shaken out, right? That becomes a 5.6% impact. And third case, I've shown you what is ideal as a swing trader, right? And that becomes a 7.7% impact. This versus this is a 3.7% increase in impact. You multiply this 20 times a year, that's a lot of money. A lot of money, right? So, what are the main learnings? Again, ride till you die, basically. Right? Ride. Keep riding the moving averages, because the 10 and 20 don't lie. They never lie. And they have been able to do this time and time again now. So the goal is keep riding the moving averages, the 10 and the 20. This is the most important rule that you will get out of this particular trade management. I still managed to make good money in Cupid. I could have done much better, right? I missed out on this entire gain over here. So that is my learning for next time. So if you've liked this video and you like this style of videos, then please consider to like, subscribe, and comment, right? It really helps a lot. And it makes me feel like whatever I'm doing is actually reaching out the masses. The idea is that, see, even though this trade was profitable, you can tell by my demeanor that I am not very happy in terms of how I managed it. I think I could have managed it much, much better. And that is the sign of a great trader, that you are constantly getting or finding a way to become better, to get 1% better, 1% better, time and time again. If you would like to learn with me and you would like to, understand more of what I do, then you can always choose to join the Telegram community. The link is in the description, and it will also be the pinned comment. So thank you so much for joining this video. I hope that you have learned a lot from what I have done and what I could have done better. And I will see you guys in the next one. Thank you. Take care.